reaction to today's markets with Amy Wu from RBC Capital Markets, our Mandy Drury, Randall Kane from Herndon Capital Management, and Paul Dietrich from Fairfax Global Markets. Good to see everybody. Amy Wu, let me kick this off with you. What do you make out of the recent selling in this market? Does that tell you something about where things are going?
Hi, Maria. Well, definitely, and it's been quite an eventful week for options markets. Post the Fed, we saw about 20 million in volume trade. That's versus an average of about 12 million. And it's kind of funny because on the market, we've sort of come full circle, but the options market is still showing structures that are bearish. So people are still buying downside. They're still looking for capped upside trades in this market right now, even with the sell-off that we've had.
Yeah, Paul Dietrich, where are you on this in terms of putting money to work? What do you want to do, knowing that we've got the Fed news in place and we are approaching the end of the third quarter?
Well, look, you know, the S&P and the Dow are at record highs, probably fully valued. And so people are asking me, where are the undervalued opportunities in the market today? And the last couple of months I've been on your show, I've mentioned China, but China is now starting to really move up. If you look at the SPDR China index, it's up 23% or so since June. Copper's up. I think there's a big commodities play. We're seeing a once-in-a-decade opportunity where people can get in something that's been beaten down, oversold, and it seems to be the two areas are commodities and consumer spending in China.
Yeah, that's a great point, because we certainly have seen some heavy selling there. Mandy, now that we've got the Fed news out of the way, it's all about earnings. So that's certainly going to be the catalyst for this market.
Yep, absolutely. That is going to be the catalyst for this market. But you know what? I'm actually going to do something a little bit different today, because I've been asked to talk about what's going on with Starbucks and Street Signs. You know, the show that I'm on before closing bell sent out our very own Jane Wells to do some exclusive digging on this, to try and find out about some of the reaction to the new menu that they rolled out about a week ago. You might remember that Starbucks recently made a major $100 million investment in San Fran-based La Boulange Bakery in an effort to improve the quality of their baked goods. And they threw out some of the old things, you know, like the pumpkin bread, and they brought in things like the pumpkin cheesecake loaf and the pumpkin cheesecake croissant and these various new things here. And it seems as if there's a little bit of an outrage, because, you know, people like their morning coffee and the thing that they're always used to. But, you know, we also had on the show RJ Hodovi from Morningstar, who thinks that this is actually going to be a good thing, and that the Boulange investment is going to be able to drive average unit volumes for Starbucks U.S. locations from approximately 1.2 million today to 2 million over the next decade. And he says the stock is pretty much undervalued where it is right now. This is a stock, Maria, that's been up about 40% year to date. So I guess the big question is whether or not this is going to move the needle. But as I say, a little bit of a backlash from those people who are used to getting their pumpkin bread when they go in the morning.
Okay. Well, have you tried the new menu, Mandy?
You know what? I have some of the new menu here, and I have a half nibbled on one that our executive producer tried. This is the pumpkin cheesecake loaf. It tastes okay, but I guess if I was someone who was used to something else, then you know, I don't know how I'd feel about it. But you know what? It tastes delicious. It's good.
All right. Listen, Randall Kane, let's talk about earnings and driving this market here. Would you put new money to work in this market here based on what you're expecting out of the third quarter?
Well, I'll tell you, Maria, in terms of the overall market, I think you have to be very selective. It's not so much just this opportune time as far as a short-term perspective. It's really a matter of where you think fundamentals are going to be going for specific companies and the valuation that you actually have to pay for that. I think something that Paul brought up was very important. If you think about what he was mentioning, he was not speaking so much to the domestic environment as far as being where the areas of opportunity happen to be. I really believe something that has been somewhat the tail on the dog, and that's been ex-US, is now really starting to get some legs up under it. We've had some very good news coming out of Germany in terms of political stability. China appears to be getting sounder footing there, as well as Japan. And so if we look at what's been happening from a global perspective, the U.S. was a leader at one time, but now it appears that other countries are beginning to take a bit more of the forefront of that. So multinational companies, I think you're going to start seeing better results coming out of them. And really the domestic companies that have been leading the market for so long, I think it may be time for them to get on the back burner.
And now, would you put new money to work in Europe right now then, Randall? I mean, we're all trying to figure out if you want to put more money international than you do in the United States, given the fact that valuations have come down so much. Is there better value right now in Europe or the emerging markets, do you think, versus the U.S.?
Well, I think that in the short term, I mean, you look at the absolute valuation levels, the answer to that I think is an unequivocal yes. The issue that you have to grapple with, though, is timing. And for the patient investor, I believe that they will be rewarded for having put money to work right now. One of your frequent guests, the illustrious Warren Buffett, talks about, buying straw hats in the winter. Why? Because the prices are better when no one wants to buy them. And so right now, I think this is where you actually make your money in the market, and patient tends to pay off for you over time.
Amy, jump in on that. Jump in on that, Amy. Given the fact that we do see valuations better in emerging markets, would you do it? What are the options markets telling you about Europe and emerging markets right here?
It's interesting, Maria. Well, first, I think I'm still focused on that pumpkin cheesecake, but in terms of the options market, right now the highest options uncertainty is nowhere in the emerging markets or really in Europe right now. It's actually focused on industrials and utilities, which I think is quite interesting. Those are domestic names. But in terms of the European recovery, I actually like a lot of U.S. names that have gearing towards Europe. So one thing is looking at revenues or operating leverage that are very highly correlated to Europe, but still in the U.S. And we found that a lot of investors are still looking at that right now, given cheap option prices.
All right, that's basically what Randall thinks as well. Great conversation. So much. We will see you soon.